Hello, guys. Hello, hello, hello. Good afternoon to everyone. Can everyone hear me? That's the first thing that I want to check if everyone can hear me properly today. You can use the chat. Just check on the channel if I got any message or anything like that. Okay. Loud and clear. Okay. So at least that's a mega improvement from yesterday. All right. Okay. Two confirmations. That's good. Let me see how I'm going to do that. Share my screen. Um, oh, not this one. Give me just one second. I'm trying to figure out which. Chrome tab, maybe. I don't know. Mm, oh, Windows. Okay. All right. Okay. Just checking that you should be able to see my screen now. I'm showing like gold futures at the moment, and I think you should still have the cam on and the. Okay. Cool. All right, guys. So let's get started, and I'm gonna basically cover like some of the generic commodities, bonds, indexes, and some some of you. Let me ask you first: were some of you there on the first live that I had yesterday, the one that basically where I spoke for 45 minutes and didn't realize I didn't have any audio? Any of you were there? Okay. So okay, let's see that at least. Sorry about that again. I don't know what happened. That's why today I decided to go with a YouTube stream, and that's at least also I knew that we would have also the okay, Steve, right? Again, sorry about that, guys. Yesterday, I don't know, something definitely happened, but it is what it is. It is what it is today. At least it's working. All right. So let me just since it's the first live ever that I'm running through the as part of basically the Telegram channel. I wanted to ask you a little bit about you, if you don't mind, trying to understand who's here today. If uh, again, we've just basically launched this Telegram channel very recently. Um, I used to basically have Ethereum Academy working as a sort of like private, closed up community where people would have access to the community. There was an annual membership. It would have access to a course, etc. Um, and then recently, at basically the beginning of this year, was approached by a couple of people who were interested in sort of expanding this Sea Trading Academy adventure to do that basically to be based like on Telegram. And the idea was basically to sort of like to open the audience to a lot more people out there, because there would not be a fixed price fee, to get in. And the only thing that basically they would be asking to people to in order to in order to basically get access to the public channel, this is public, everyone basically can join and have access to it. Then there's going to be there's a development of a private group, which is basically going to be a lot more a lot with this sort of like live sessions. Right now I'm opening to everyone with my call outs, my trades, and then a lot of like sessions that we're going to basically do. Ask me anything, Q&A, trade analysis, and sort of things like that. So that's the way I'm usually setting up the week. um, um, so so that's basically the first. Yesterday was meant to be the first session. Now obviously this is the first official session, and I'm trying to figure out a little bit, again, who's who, what you guys are doing, if you basically been trading a little before, if you're new to the game, if you've been trading for how long, if you've been part of any community before. um, that's the sort of thing that I'm trying to basically feel at this point in time. Trying to get to know each other a little bit more. So if you just basically want to type something in the chat and let me know, that'd be great. Okay, they've been learning for 1 year. Okay, training, but what you're the game? Okay, all right. I think yesterday we had a few more people there. Today, it's going to be a pretty private session. That's good. I like to have like a sort of like a private session. All right. So look, I'm going to basically do the sort of thing that I do. Again, the sessions that I'm running, the live sessions are part preparatory, in the sense that basically I like to do that, say, 30, 40 minutes, sometime a bit more before the US Open. um, I like to basically have a little round of markets, look at basically the way that I work is a very macro approach. So that means that I'm looking at different asset classes. I'm looking at stocks. I'm looking at through the lenses of different things. It could be like basically big caps, could be small caps, it could be just indices, could be sectors. I'm looking at bonds. Bonds have been a bit boring for the past few months, but now we start seeing things happening um, because of the conflict in Iran. I'm looking at commodities, and I'm looking at agriculturals as well, all sorts of commodities, but not only precious metals and energy related commodities. And that's the thing, I'm trying to basically have like a sort of round of a macro view of things, of the flows, how they basically go. Because at any point in time, there's going to be, there's going to be an institutional flow, and not only institutional flow. I mean, there's retail flow, and now retail basically can also become quite important as a flow, because retail trading has become, definitely very consistently growing, because of the way that things have gotten democratized in finance in general. I mean, if you go back, like 10, 15 years ago already, not maybe a little bit more than 15 years, but things were definitely not the same. Things were not as easy to use as on the trading platform. They were not so cheap, because now you can trade and pay nothing. I mean, it's you think that you pay nothing, but okay, you pay nothing, no real commissions, no hard dollars on your trades. Whereas basically, if you go back, say, 20 or 25 years ago, or 35 years ago, when I started in the business, um, this was a very expensive business, in the sense that you would be trading futures, or you would be trading options, you would be trading stocks, and you'd be paying a lot of commissions. And now the game has definitely basically erased all of that. So I think that the game has been open and democratized to open to the public. The guys like you and I, the retail traders. And obviously, basically, this has created a lot of flows. Then the institutional has always been there, and not even more now these days. There's a lot of algorithm trading, like funds like Seed Commodity Trading Advisors, or funds like Millennium, Citadel, that run also a lot of algo trading. As a matter of fact, a lot of like stock trading now, it's almost 60-70% of trading stocks is algo trading. Um, so all these people basically, they meet up in the market, and that creates this sort of flows, and that create this sort of print that I like to basically look at in the price. um, I don't know if some of you are already part of the private group, the one that are here today, but what happens is that there's if you're part of the private group, you'll have access to this 11 hours video online course, which basically explains a lot about my methodology, the risk management that I'm using, the position management, etc., etc. Um, and um, and I explained a lot of the things that I'm going to be covering in these live sessions. But my main approach is technical analysis. It's not that basically I don't value fundamental analysis, because I look at fundamental analysis. Obviously, I all day long I cover, I'm very close to the news. All day long I've got my Twitter feed that basically goes on my screen. Obviously earnings reports, economic data that comes out. It's very important to me. But when I said like I'm more technically driven, the main 95% of my analysis is based on technicals. And if you basically go through the course, you'll understand why. Because I think it's important for people not to take it as granted. Like technical analysis, there's a lot of people still out there, that can think, oh, it's kind of BS. It leads to nowhere. And at the same time, there's also a lot of people that think, oh, yeah, 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 technical analysis. But I think, like in anything in life, you need to have some context. You have to basically to understand the basis of why it should work, or why it should not work. And it's like, like saying that, like the doctor that basically looks after you, or the surgeon, after you had the surgery, obviously he needs your vitals. He needs the chart to also be able to have a sort of like holistic approach to how you're doing. So he's using these things. He's using pieces of information that makes sense. So saying that, oh, I don't want to use technical analysis, for me, it's like being, like that, having like being very blinded, or so, and not being willing to open your mind, and saying, oh, I don't want to use any fundamentals. Also, it's not like, it's basically all white or black. It's something like gray. But the majority of my analysis is definitely based on technicals. And the main, and to sum it up, I think that basically everything is um, in the price action. Everything, every sort of supply, demand, all sorts of actors that come in the market, all sorts of inside information, anything that we can think of that could move the fundamental value of a stock or a commodity or thing like that is somehow represented in the price. So for me, the price is number one, and the price action is number one. And no matter what I think, no matter basically what my thinking is or my strategy is or what I intellectually think about X or Y or Z market, I will not fight the price action. That's basically what my years of experience have taught me, that the market and the price action is number one. So especially like in this market like these days, it's been like a you know, it's been like a very choppy market for what's from what we've seen. It's definitely on the part of the indices, but even like the Magnificent Sevens and the big caps, they've been like really it's been a chop market, and it kind of continues right now. So in these markets, I'm a lot of time I stay nimble. I watch. I don't hurry for a new position because again the market is open 24/7 if you want it. 24/7, almost basically 365 days a year. It is, as a matter of fact, 365 days a day with crypto now, and a lot of basically things that will also stocks will try that will trade also on the crypto exchange. So the opportunities are always there. You don't have to basically rush into these opportunities. So I think it's important that for you to understand, and especially for you, you guys who've been like doing that for maybe a year or slightly more, there's some things that are super important that you need to understand. It's never all white or black. It's kind of gray area, and opportunities are there. And the way that basically I approach markets, I look at different sectors or different asset classes to try to understand where the flow goes. And once basically I detect something that goes, some type of flow, and I feel that because institutional, the retail, okay, we trade, but we trade small size. We're not going to basically make a super impact unless basically we do like this sort of like GameStop type of things that we've had like in 2020 and well, you've got like all these chat rooms going all together, and basically, yeah, I mean, this happens. But generally speaking, retail investors, as much as basically they represent like some concrete size in the market, we all trade like kind of small size compared to these big hedge funds, these multi-billion hedge funds and insurance companies and equity and private equities and stuff like that. So these guys, they leave a trace behind them. Every time that they want to start building a position, they build a position. They're not like basically you and I, where we could be in and out on whatever XYZ stocks or gold, or it's easy for us. We don't need that massive liquidity in general. I mean, for the liquidity of the sort of size that we'll trade, we could trade almost any ETF or any commodity or any FX for sure, because FX is being the most liquid market out there. But these institutional, when they come in, because I've been on that side of the market, when they come in and they need basically this takes time in order to basically deploy capital. They take time in order to take a position. They take time to basically in order to decide which stock they're going to play or which market they're going to play. They're going to basically go long the bonds or short the bonds, and and because they don't go like chick chack, one day, but the idea is to go for these sort of swings. I'm not saying that obviously there's some guys in the hedge fund that also do intraday. There's lots of them as well, and a lot of prop traders that have a lot of money as well that do intraday. But these real institutional funds, when they deploy capital and they go into things, it's not like to play in the next hour or the next day. It's basically to play at least for the next week or the next 2 weeks or the next few months. So they start deploying capital, and you can see that in the price action. That's the beauty of technical analysis. That's why basically technical analysis and price action for me is number one, because it lets me see things. And once basically I found something that I like, where I can start seeing a flow of money, of institutional money going in, plus the retail that will follow. That's the market that I want to concentrate. Um, Same for stocks. I like to play stocks which have a momentum, which have a trend, which and if anything, basically, if we can get also something like a either a breakout or a some kind of catalyst that explains the move behind, it's even better because it adds the probabilities to a successful trade. So the way that I do things and the way that I want to run these live sessions going forward is that we'll have basically prep so that basically you can understand the way that I think and maybe help you also to help you to think the I wouldn't say the right way, but to help you to think in such a way that you open your mind in different markets in different basically because sometimes I also have people saying, oh no, I don't want to I want to trade only big caps, or I want to trade only this or that. I, again, I think it's like having a closed mind, or thinking like that. For years, for instance, gold was not doing anything, and now I'm going to show you I'm going to open this thing. I'm going to put the weekly chart so you can see. I mean, let me put the monthly chart. So, for instance, I'll show you that, this was basically the last big action in the 80s that we had in precious metals and silver, corresponding to the big squeeze that were in silver. From basically the 8081 all the way to basically 2002, this gold market was on a bear market. And people like basically they don't understand or they don't realize or they don't remember, but I was there. I was trading these things. Now it's like now you listen to any influencers on social media. It's like they discovered gold. I mean, gold is basically as old as the world. This was basically, and this will probably the only money of exchange that we will ever keep. Way beyond Bitcoin or crypto or anything like that. This is something real, and that's why people have always basically got back to gold. But what I'm saying is that why I'm showing you that. Sorry about the is that there are periods of times where you're going to be in a massive either bear market or a bull market, or sometime when the market is not going to do anything. And what we've had recently with the big push that started in 2020, let's say, that was really basically, if you go back to also my Twitter, that's when I started basically also going back in gold a lot more. Gold will always be part of my commodities, part of my share in long-term portfolio, because I think it's always basically important to have some commodity and real assets part of your portfolio, especially the long term. That's for another discussion another day. But the technical started really moving towards 1919 2020. That's when we started having basically the big move in gold. And then obviously, again, if you go back to my Twitter feed, then you'll see the big break of 2000 2500 was basically the market. Was I expecting that we would have a market like that, where that would double the price and more than double the price in gold? No, I was not expecting. But again, my goal is not to expect or to basically have a crystal ball and try to figure out, oh, we're going to go there. My goal is basically to try to understand that there's something going on. And because there's something going on, because there's volume, because there's institutional flow, and because now I start getting the momentum, I start getting the trend, and my goal is basically to be in that trend as long as I can, pay myself along the way, and ride that trend for as long as I can. And that's why basically now, for the past like year, 2 years, you've been people only talking about gold. But it's not a new thing. I mean, gold is not a new thing. It's like one of the biggest commodities market trading in an IMEX. Back in the days I was in New York, it was like one of the biggest exchange, in the in the NYMEX. So it's become trendy. But again, maybe tomorrow it will die. This. I don't know. I'm not calling up right now the price. I'm just saying to you that it could be, um, it could be that gold. We've seen the top around like basically 50, 5,500, 5,600 in gold. Maybe we've seen the top, and maybe but now we're gonna go back in that range, or that maybe a bear market. I don't know. It's at this point in time. Um, when I say I'm not trying to call it, but I'm saying that there's been this big trend, there's been this big momentum, there's been this big fashionable market going on, and everyone was playing that. And lately as well, basically silver started catching up, so people were playing silver, and that's it. And my job as an active investor, as a trader, is basically to try to catch this move as early as possible. Um, Again, let's look at crude oil. I mean, if you look at crude oil has been okay. This is the big move that happened during COVID. This is the big move that even me surprised, like, oh, probably 90% of the oil traders got absolutely got smacked, and because I didn't even realize that the futures contract could trade negative. I mean, the day that I remember that day again, like as if it was yesterday, the market went negative, and I didn't even realize that you have a futures contract that could trade negative, but it did, because at that time, at that point in time, basically the people, the holders, didn't know where to stock. There was no storage because the whole economy was stopped. There was no consumption of anything. There was no consumption of gas, petrol, by plane, by train, by cars, by boats. Everything was stopped, and the producing companies didn't even know where to stock. So people, they would pay you in order to basically make sure that you can store this thing, and they would basically pay you to hold uh, oil. I mean, this was a crazy situation. This year was basically the year where most of the petroleum companies and the trading side of the petroleum companies, like the Total, the Shell, the BPs, the Chevron, all these guys. You have to realize that these petrol companies, they have trading rooms that are almost as big as what you have at Citigroup or JP Morgan. It's huge, and these guys, they make a lot of money trading the paper market, the real market, obviously, but the paper market. And these guys have made it on that year in 2020 was their best performance ever that they've ever done, with the price going negative. But okay, I diverse right now, but what I wanted to tell you is that look at the price action. It's a monthly, okay? So there was nothing to do in crude oil, nothing to do in crude oil at all. And I started basically playing crude oil when we started breaking. I'll show you on the dailies and again. If you go back, if you follow on the Twitter as well, that's when we started basically trading, this year, just above the 59 level. About the 59 level, about the 60 level. That's basically when I got my first signal, and I started basically building slowly and slowly and slowly a position around that. Okay, did I get out at the top of the market? No, I wish I did not. And I got out. I think the highest print that I had was, if I remember, on the crude, 108. No, no, even below. I think it was like around $100. So yeah, basically I had an opportunity cost of $18 that I left on the market. But again, my job is not to pick the bottom, and my job is not to pick the top. It's an impossible mission, and that I paid way too much in price, and burning my fingers in the past trying to do that, trying to basically call up the top or the bottom. The bottom, I'm real happy to take the meat of the move, and making money on that. If the market is going to go 60%, but if I can catch 30% of that move, or 40% of that, I'm more than happy, because the compounding is already great with these levels of of um, of performance. So again, the point that I'm trying to make right now is that there will be period of time where energy sector is going to be the it's going to be like, look, I want to show you, for instance, like, all right, PLTR. Um, that's the ETF Magnificent Seven, right? So that's basically the most liquid ETF, which basically concentrate only, if you do want to buy the seven magnificent stocks, so the Tesla, Apple, Meta, Amazon, Google, Microsoft. So this is basically the ETF. Again, you want to trade that. Um, Look on the daily. It's been like almost like the index. I mean, it's a pure copy of the index, because at the end of the day, S&P 500 now is really 90% of the move turns around, it revolves around these seven magnificent stocks. Um, and But you look at the market action in these things. It's been like, I mean, again, I've been I've been calling like that downtrend, and I've always basically said that right now, if you want to buy, especially for the long term or for your long term portfolio, mid-term portfolio, no, it's not the best time. It's not the best time, and but some people will insist on trading. Oh, I want to trade Tesla. Oh, I want to trade Meta. Oh, I want to trade Amazon. But look at the trade. I mean, if I'm looking basically at these stocks, look at them on a daily. Look, you've got like basically the moving average are almost flat. These the performance are basically minuscule. While at the same time, you could have gone for basically some AI theme or the energy theme, like I'm going to show you, like for instance, XLE, for instance. Oh, what am I doing there? Oh, XLE. No, I don't want the. Hmm, okay. Hold on one sec. Yeah. So XLE. I was showing you, for instance, Amazon before. I'm gonna basically call it back again. Amazon dailies, and look at basically go back to XLE. What do you want to be? Where do you want to put your money? I mean, you guys, you work hard. I'm sure, like I do. What do you want to basically put your money on in this market that shows basically a clear trend, a clear momentum, a clear conversions of moving averages, and you know that's basically where you're going to make the most money, or you want to play these Amazons and the big, because you think that, okay, I'm going to trade the big caps. I'm not against trading the big caps. That's where you get the liquidity. That's where you get all the options, volume, and etc. But what I'm saying is that at the end of the day, it's not basically what necessarily will bring you the performance, the alpha, in this thing. And again, like I hear, like I've got a lot of students that say, oh, I do like this dollar trading, the dollar how do you call that, the DSA, no, the dollar average something. Well, they're dollar average basically. Every month they put like a certain sum in in say the S&P. I was talking to like a student, young guy, 25 years old. So I'm doing that every month. And I said, look, at the end of the day, look at what's the S&P done this year? Nothing. Even worse for him, because this guy was European based or Euro based. So if you take basically the fact that the dollar totally depreciated against the euro, he lost money and on the S&P, on this S&P fund. And I said, yeah, I don't know, I don't even know what you do that. You're 25 years old. You should be looking at some of the the hot themes out there, the AI related, or the all the AI ecosystem, because it's like not only AI, it's not like open AI, Chat GPT or Microsoft. There's lots of things going around the theme. I said, look at this thing. Well, energy. Obviously, energy was a big thing playing now. Or again, if I show you the second biggest theme that was like all of like past 2 years. Okay, that's gold, obviously. Okay, that's the gold market. So this ETF represents the exact same thing as the gold. It basically, as a matter of fact, the old physical gold in their trust. That's GLD. But if you look at this one, look, gold miners, gold miners. You look at, for instance, like for the past, let's say, 2 years, from the beginning of like 2025 to the recent high, you had 222%. So what I'm saying is that you have to be picky, you have to do your homework, and that's why I think like there's a lot of myth out there in the world of finance. That's, I think, probably what pushed me to open, to be willing to open the trading academy and to basically, you know, partake, my experience, my 30 years experience of 35 years of experience of markets, and what I know about this and what I've seen as well, done from customers, from students, to partake, this all of knowledge, and make sure that people are open-minded. They don't basically they stay open-minded about trading anything that basically makes sense. And when I say makes sense, that means that basically it has to be. is a theme. There's a momentum. There's a trend. There's a print from the institutional that goes in there. There's all sorts of basically different factors that bring in, why should I play GDX or gold or metals this year? Why should I play industrial metals? Why should I play energy market? And every year, again, for those of you who are part or who will be part of the private group, that's something that I'd like to do. Also to cover the way that I'm finding these diamonds in the midst of everything. And it's a lot of work. I'm not saying it's like they come to you. You use the modern technology these days. You use scanners. You use your eyes. You use a lot of screen time. That basically gonna be you're gonna be in front of your screen watching a lot of like different markets. That's what I do. Every day. I spend like a minimum of like 10, 12 hours in front of my screen looking for basically what's the next one, what's the next opportunity. Um, on my weekends, I review my charts as well. It's not like, people, that's also the other myth, you're going to start trading, you're going to basically start making like lots of money out there, suddenly. It's not exactly like that. It's not exactly like that. It demands hard work and patience and discipline, and I'm sure that all of you have it in you. It's just that basically you need to, like in anything in life, you want to lose weight, if you want to stop smoking, if you want to, you have to basically put yourself into it. And trading or active investing, because I'm gonna have, like, I have different type of people. I have people that have a full-time job and they can't do day trading the same way that I do, but they're looking to basically position, like, for the sort of bigger swings, like the 1 to 3 weeks type of swings. And obviously it's a slightly different type of trading. It's slightly different type of risk management, but people, they do these sort of things because they have to match their lifestyle, what they expect to do out of trading or active investing, and see how much time they have to dedicate to it. So that's the important thing, like that. So going back to the methodology, it's a lot of my methodology is basically based on technicals. It's based on a lot of, like, I'm very much of a trend follower. I was kind of raised in the markets like that. I was working very early in my career with commodity trading advisors or like big macro funds that were playing this sort of move. So I think probably my brain was like kind of influenced on that. But I think it's that, that's what makes sense. And I'm not saying like this. I know some guys. I got some buddies that trade the market day in, day out. They also are very good at shorting markets. It's never been my thing. I mean, it's not that I never short. I short markets, but there's like some guys that are extremely good at that. These guys that are extremely good at shorting, for instance, they're extremely disciplined. And it's not that I'm not disciplined. It's just like I feel like overall, sometimes the odds are better, are on your side when you trade the market side. But obviously the guys that are good at shorting the market, and the guys that are extremely disciplined for that, because you have to be disciplined, because otherwise you will lose your shirt and everything else. um, they will do that, and everyone basically has a different style. Again, it's about finding your style, your favorite setup, find something that basically fits your lifestyle, your time availability, and all of that. But my style is very much technical driven, momentum and trend driven, and macro driven, in the sense like I've got this top down approach where I look at several asset class, and then I will decide, okay, that's what I'd like to play. I'm not the one who will really play the S&P very often. Always, okay, sometime I'm going to play, say I'm going to have an options play on something because I see something. But what I'd like to play more than that is what you see here, like like my sort of regular list of ETF that I look at. Um, So USO, for those who don't know, USO is basically oil. XLF is basically financials. XLE is all basically energy sectors. So it could be oil producers, gas producers, or manufacturers. UNG is natural gas ETF. So you can trade everything, with CFDs, with futures, with ETF these days. And you can also have all these ETF, almost all of these ETFs, you see, they have basically a leverage version of it. So all these ETF, they will give me what this regular ETF gives me, and but times two or times three performance on a daily basis. So again, you get implicit leverage that you get back. You get loads of instruments. You can basically look at different sectors, and within basically the S&P or the Qs, which basically, or the Russell 1000 or 2000, will give me the bigger trend, the bigger context of what's happening in the market, and then I will try to refine it and granulate my choice into the right sector, the proper sector where I think that, that's where I'll make my alpha. Because like I showed to you before, you can buy XLE, or you could buy basically the gold miners, or silver miners, or you can basically be long the S&P. And on one case this year you will be almost basically flat, and the other case basically you'll be up 40, 50, 60% or more. So that's why it takes a lot of time, a lot of research, a lot of basically appreciation of where we are, what's the context of the market, how to choose where to go. And again, market is available 24/7. And when I'm saying that, I'm truly saying that, it's 24/7 market. So you don't need to rush in anything. It takes time to look at the market, to analyze the market, to basically see something that starts appearing, as a catalyst, as a trend. It takes time to start building the position. Um, but it doesn't matter. You don't need to trade. Neither you need to trade every day. You don't need to force trade. I mean, it's something I've never. When I've done it, probably, yeah, when I was young, but not anymore. Um, and and the other thing that you don't need to do is also, to set yourself a number. Also, that's the other thing that I see with people trying to set themselves a number. I need to do, I'm going to do day trading. I'm going to leave off my day trading, and I'm going to basically set myself the goal of making 200, 500, $1,000 a day, whatever basically suits fits the bill for you. Again, not my thing. I think like setting yourself a number is something that basically puts pressure on you, on your psychology. Sometimes the market has nothing to offer, and then you're going to force yourself to basically do something in order to basically fulfill this sort of like pressure you have in your mind of making your two, five, 500 or $1,000 a day when there's nothing. But there's other days where that you're gonna basically hit the pedal to the max, and you know that this is the market, this is your setup, this is the real risk reward that's offered to you is the right one. That's basically what you need to take, and that's what you need to step down to the pedal, and you'll make the money, and then you'll make a lot more than your basically daily targets, or that you set yourself. So I think, from what I'm saying to you is like, it takes time, it takes patience, it takes discipline, it takes focus, it takes works to go through your charts, to go through, to set yourself, the right way, in your trading or active investing. It's You don't need to trade every day. You need basically, when you see your setup, when you've been patient enough to wait for your setup, and then you take your setup, because you know your setup, and then you know that basically you're going to get 70% chance of being right, or 80% chance of being right, or whatever it is. That your setup is going to show you in the stats, in your trading stats. And yeah, that's 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 what I wanted to say to you as a little bit of an introduction to what I do, how I do things, how I see things. Again, the live sessions that we're going to start proper, in a couple of weeks to come, they're going to be asked on different type of sessions that I think are helpful. See, out there's the guys that will basically give you the signals every day, or they will, you have like robot trading, you have like signals and things like that. Uh, for me, it's not my ethos to do this sort of thing, because I really believe into teaching you how to fish. I think that's the best proverb that I can think of. You can give you fish every day, but if I can teach you how to fish, and then basically within 3 months, 6 month time, and you can tell me, Ollie, I'm on my own. Thanks a lot. It helped. What you taught me, what I learned from that guy, from that guy, and from that book, and this and that. And now I basically understand what's my setup. I understand my own trading psychology. I understand my own trading character in the context of things. Then I'm the happiest person on earth. I'm the happiest person on earth when I get the message, the emails, the from students, ex-students, that tell me, oh, I've done this, I've done that, and I made this, and I made that. That's my greatest achievement when I can do that, and that's why I share my trades. Obviously, I'm telling you, I like to go long there. That's my stop loss. That's my targets. That's how I'm going to do things. I share these things, but for me, the most important thing is that for you to understand what's the idea, what's the concept behind my line of thinking, and start replicating yourself to whatever basically fits the bill for you. What really basically makes the thing tick for you. Again, I've never reinvented the wheel, and I've never basically. I see some guys out there, in some big trading communities as well. And say, "Oh, my method." It's like, yeah, I think it's BS. It's not your method. This thing existed like 40 years ago, or 30 years ago, and I can name you the guys, in technical analysis that came up with this, and with this index, or this methodology, and they sort of like appropriate themselves, say this thing because they just done something, I think it's like BS. It's like there's not much to reinvent. You don't need to reinvent the wheel. You just need basically to use the stuff that has been working again and again, year after years. And the reason why I'm telling you that is because I've been working with algorithm funds and some hedge funds, but I think the best example is basically these algo funds, or these CTS, commodity trading advisors, that have like track records of 40-year plus, and you see basically a track record of these guys and what they could print year after year after year. And again, it doesn't mean that every year they were profitable or positive, but over a 40-year period, you understand that this is no luck. There's no luck. It's just basically there's a process in that they apply day in day out, and that's what they do. And therefore, I think that the most important thing that I can do for a trading community is to get yourself into that process. And the way that I want to basically do that is like, obviously, the good start is to watch the videos, because at the end of the day, okay, it's like 10, 11 hours is not that much. I mean, I'm sure you can spare a few hours here and there during the week. And once basically you've done that, and you can compare to where you're at the moment, or what you're using, or maybe you're gonna have this haha moment, thinking, oh, I didn't know, I didn't realize this, I didn't realize that. Oh, that's not bad, this thing. Or maybe I used to do this way, but maybe I should try this way. So that's the first step. The second step um, is about basically coming, showing up for the live sessions. The live sessions are going to be, again, analysis of the market. Today, it's a special session. Look, guys, it's not like the typical session. I'm talking about a lot of different things right now. But because the first, live session that we're having out of the Telegram channel. But this what I'm saying is that the live sessions I like to make them such as basically there's part of light trading, there's part of analysis of the market, seeing how I see the market, where I see the context of the market, where I think basically the action is going to go, and where we should basically start putting our money in. And then part of the other parts of the live session that I think are interesting is like the EMA or Q&A type of sessions where you have questions about the course itself or the methodology itself and again there's no stupid or very smart questions, it's just a question. Again, everyone is in his own journey to learn, in this basically journey of learning how to trade and how to invest properly. So there's no CD questions. It's just a question, that I will answer to you, and I will make myself available, because that's how I see myself very useful in that. I'm not feeling useful if I'm telling you I'm buying gold here and I'm selling Tesla here. And okay, it's good. Maybe yeah, you'll make money off the back of what I do, but it's not really what I'd like you to take out of it. You see what I mean? And also the other sessions basically are based on questions that the students, the members of the community will ask me. Say, oh, in that part of the video, Ollie, you're talking about this and that. I'm not sure I understood, or could you develop on that? And so that's what I do. Sometimes I've got many times the same question, but okay, it doesn't matter. Again, people are at different point in their journey, and I understand that. Um, and then the other aspect of these live sessions that I think are very good as well, are very useful, is the mentoring type of thing. Like, I'll show you my trade, and I will explain what was behind that trade, why did I do that, how did I do that, why was wrong to do that, why it happened to be a successful trade, and try to basically decompose the trade in different parts. But I like to also do for my students, because obviously my students and the members of the community, if they have to have skin in the game. I think it's an important thing. Um, you can be on like a demo account and stuff like that for a little while, at least basically to get used to, say, the platform that we'll be using, and I understand. But I think it's important that you start doing things. And again, by doing things, you don't need to basically you need to basically have risk management that's right there, that makes sense, without basically risking so much, and you will learn a lot out of this. That's how you learn the most out of this. Um, so so that's basically how I structure the live sessions. That's part mix of live trading, live Q&As, trade analyses, um, course analyses, and that's basically I like to do things. Um, right. So look, so today I think I'm gonna leave it there. I think it was like a sort of general intro of what I wish to do with this community, how I wish to develop that trading community through Telegram. Um, at the same time, I'd really much, I'd like to, if you have any questions, go ahead. If you have any notice, or I mean, anything that you think I've been missing, uh, or I've missed talking about, or something that you'd like to basically see in those live sessions, or in the channel in general, just basically just don't hesitate, tap in chat, or you can DM me, in the on the Telegram channel. So yeah. Thank you. All right, guys. So that was like the intro that I wanted to have. Again, going probably going forward, it will be more of a like I said, the program that I want to basically implement is analysis of the market, trade, trade suggestions that I'm going to take, stuff like that, and then the other basically our sessions that will follow through. All right, so guys, thank you for participating, and I'll see you in the I'll see you in the channel. Again, just don't hesitate to ask any question, to DM me, to put some notice on the chat, and I'll be happy to assist with anything I can. Okay. All right, guys. So see you very very soon. I hope that you enjoyed it, and I'll catch you later.